Good day, everyone. Thank you for joining us once again here at Seafood and Brew for our economic briefing. For this briefing, we want to review over the advance estimate of the third quarter GDP and then look at some inflation numbers and follow that up with the implied probabilities for the Fed funds rate over the next 12 months. So overall, when we look at that GDP for the third quarter, it came in at 3.5%, below where we saw it in the second quarter where it was 4.2. But still, if we look back to history, we're still higher than any other quarter going back to 2014. So still fairly strong. In fact, it came in above the forecast of 3.3%. That median forecast for Bloomberg economists. So we're above that forecast number. When we look at those individual components of GDP, we find that consumer, the segment added 268 or contributed 268 basis points to the overall growth rate. If we recall, the consumer segment makes up about 70% of GDP. So we continue to see a robust growth rate in that consumer segment. That's what we want to continue to see as we move into that fourth quarter. This happened even though we saw that the retail sales come off just a little bit in September, but we still had enough growth to push us into this area of 269 basis points. Growth in both the goods and the servicing segments. When we look at the investment portion, we can see that contributed 203 basis points, fairly strong, particularly when you consider last quarter when we were at a detraction of 7 basis points. Now, when we look at that 203, we have to take into consideration the fact that inventories contributed 207 basis points to the overall growth rate. So we see that structures component detracting, and we saw in that both business construction came down as well as the residential fixed investments came down. And residential fixed investments has come down 5 over the past 6 quarterly numbers. So we continue to see a little bit of softness in that area. But inventories really popped up. Now, this is obviously a concern for the fourth quarter GDP. Are we pulling some momentum out of that growth rate for the fourth quarter? And we'll have to continue to look at that as we move throughout the remainder of this year. But government spending continues to remain strong, contributing 56 basis points. And then we have the exports-imports number, that detracting by 178 basis points. That reduction in the overall exports kind of compounded the impact of the increase in imports. And then those two dynamics working together resulted in a pull-off of that 178 basis points. So overall, if we look at the consumer and investment portions, continue to be fairly strong. A little bit of a question in that investments with those inventory numbers, we start to see that pull off in the business fixed investments. Looking at the initial GDP now number for forecast for the fourth quarter GDP, that comes in at 2.6%, much lower than the third quarter and the fourth quarter, the third quarter and the second quarter GDP numbers so far. So as we move throughout the fourth quarter here, it will be interesting to see how this moves during that time frame. Overall inflation continues to be within target. we can see that the inflation rate dipped down a little bit in September. When we look back to July, it was 2.3, 2.2 in August, and then 2% in September for that PCE. When we look at the core remains at 2% where it's been over the past 5 months. So continue to see stability in that inflation number. And that leads us into the Fed funds implied probabilities. We can see here in December, it looks like we're continuing to see a higher probability of increasing that Fed funds rate. We're at 68.9% probability of that rate going up. Now that is actually lower than what we saw last week, where it was closer to 75%. So still pulling off. Interestingly though, when we look into 2019 going through October, we can see it's really showing one interest rate hike in 2019 when we look through October. So that's kind of interesting when you compare that to the Fed dot plot, and they're showing a total of 3 next year. And we're showing with the probabilities 1, maybe 2 if you look out into this range where we have about a 30% probability of moving up to that 275 to 3% range. But that's what we have for you today. We look forward to seeing you next time, where we're going to review over the third quarter performance of the Community Bank benchmark. Have a great day, everyone.